Hi everybody, welcome back to my channel on how to save money on your taxes by entity selection. I'm here broadcasting from South Texas with my mascot, Leppy the leopard. It's cold actually here right now. It's been so low the temperatures. Last week, if you remember on my other video, I said it was in the 80s in October. Now we're at the end of October. It's 50s overnight or lower. Not quite sure, but I know this. I have my heater on. I don't do good in cold weather. Anyway, let's get to the matter of at hand. You know, it's important that I communicate to you. I like teaching, so it's important that I communicate to you so that you learn. And I hope I'm doing a good job of it. I want you to learn all that you can and take it to the bank, literally, because what you're going to learn is going to help you save money on your taxes. Not just a few $100s. Maybe that's what it may end up being in your situation, but thousands of dollars. I've saved my clients thousands of dollars. So just hang in there with me and just think of it as a learning process. Again, knowledge is power, and I'm passing on to you knowledge. Knowledge that will help you save money on your taxes by simply picking the right entity for your business. That's very important. I know in all the years I've been doing this line of work that's a major stumbling block. People are not, business owners are not, startups are not properly counseled as to which entity structure they should choose. And usually you come to me or other tax professionals after the fact. You've already done something and not sure where you might have picked up the knowledge or information, but it just wasn't accurate. And you can't backtrack. You can't go back and reclaim that money because you made a mistake. So let's try to avoid all that. And hopefully you're watching my channel and you haven't selected an entity. You may have already selected an entity, but you're coming to find out through watching my videos that it was the wrong selection. So that's okay. Live and learn, and we'll move on. At least you're not stuck. So you can change and save money on your taxes. So, okay, one of the things I need to do is make sure you understand the different entity selections out there. There are several, and you may be familiar with it, you may not be, depending on where you are in your business, how much experience you have, etc. So the major entities that exist, probably the only ones, are C corporations, LLCs, which stands for limited liability companies, limited partnerships, LPs, that's another name for them, or GPs, general partnerships. And you also have nonprofit organizations, which I've helped nonprofit organizations set up their entities as well. But particularly in my video series, you're going to learn mainly about the S corporation and how to go about setting one up. to save money on your taxes. Now, if you're a sole proprietor, what is a sole proprietor? Sole proprietor is a self-employed person who usually gets a 1099 at the end of the year. 1099 that reports your income to the IRS and reports it to you so you can file your tax return. A lot of people don't know sometimes that they are self-employed, and that's another issue for another day. Some people are being hired on a 1099 basis as independent contractors, but being treated as employees. That's against IRS regulations, which means it's against the law. So maybe an issue for another day. Anyway, so you're a sole proprietor, meaning you're working for yourself, and you're reporting your income and expenses on a Schedule C on your individual 1040 tax return. If you're an LLC, a limited liability company, but you're the only member, you're the sole member, as far as the IRS is concerned, you are considered a disregarded entity, meaning that you are going to file a Schedule C on an individual tax return and be treated somewhat similar to someone that's self-employed, sole proprietor. That's just the way it is. But there's strategies to get you out of that mode. Why do you want out of that mode? Because a sole proprietor, a sole member LLC, and in some cases, general partners are subject to the self-employment tax, which is the Social Security and Medicare tax. That is what the self-employment tax is. If you've been wondering what that tax is on your tax return, it's calculated and put in your tax return after your federal income tax is calculated. Okay, so we got three taxes we're talking about: federal income tax, Social Security tax, and Medicare tax. Three taxes. And they're also known as payroll taxes. So employers take those taxes out of an employee's tax return. But you're a sole proprietor, you're a single member LLC, and you're subject to the self-employment tax. And nobody pays your half of the payroll tax because, like I said in the previous video, you're an employer and you're an employee. You're both. So you're going to pay both sides of the Social Security and Medicare tax, aka self-employment tax. But what I'm going to teach you is how to strategically shift to another entity selection to save money on your taxes. Because that self-employment tax is like near 17% of your net income is taxed. And sometimes it catches sole proprietors and sole member LLCs off guard. Okay, your business did really well, which is great. You want your business to do well. And your net income is high. Great. That means you either have very little expenses to claim because of the nature of your business, or you were very good and efficient at keeping your expenses low. Now that's important. For C corporations especially, that's important because they want to be able to have net income to pass on to their stockholders. That's a different topic. And anyway, so what we're trying to do here is if you're a sole proprietor or a single member LLC, is help you save more money on your taxes. So one thing to remember is that an S corporation, which is what I'm going to speak about next, is not an entity selection that you go to the state website and form your entity. C corporations, limited partnerships, general partnerships, and even nonprofit organizations to a certain degree, you go to the state, your state website. And these days you can file your formation for your entity structure online and you pay a fee, usually to the state, for forming that entity structure. Not so with an S corporation. S corporation is an election you make to be treated as such, as an S corporation, for tax purposes, and you file a form with the IRS. The IRS is the federal government. The state government handles the formation of your, like I said, C Corp, LLC, general partnership, limited partnership, PLLC. I mean, there's so many different structures, and you got to check with your state to see which one you can do because certain professions like lawyers, doctors, etc., they're limited and may be forced into a structure based on their profession. But most businesses are not. But like I said, some professions are. And it is limited or sometimes restricted to those professions only. So if you're a retailer, you can't form a, a certain entity structure which is reserved for other professions. Anyway, so I think what I'm going to do, maybe on the next video, is walk you through the step by step of what you have to do to elect an S corporation. The starting point is if you're a sole proprietor already or a single member LLC, we convert you to an S corporation by filing that form with the IRS. Now, what's the benefit? What's this big tax savings I'm talking about? Well, I mentioned earlier that you're subject to around 17% of your net income is going to be taxed with that self-employment tax, which is a Social Security Medicare tax. S corporations, similar to more than one member LLC, which is more than one member LLC is treated as a limited partnership for tax purposes. Limited partnerships, general partnerships, estates, and trusts are, generally speaking, flow through entities. The net income flows through, reported on a K1, and some of you might be familiar with the Form K1. The information is reported on the K1, sent to the IRS along with the return, but that net income is is flowing through, reported from your K1 to your individual tax return. Now it doesn't go on your Schedule C because you're not a sole proprietor anymore. And you're not a single member LLC, you're an S Corp. So the net income flows through to your individual tax return and not subject to the self-employment tax. Caveat, caution, general partnerships, a general partner who's active in his partnership, yes, the K1 will report their income, that net income, as self-employment income, and they will be subject to the self-employment tax. Another topic for another day. Right now I'm focusing on you sole proprietors out there and you sole member LLCs and other LLCs that multiple member LLCs also can elect to be treated as an S corporation, and there's certain other entities, but we're focusing on sole proprietors and single member LLCs because that's what I've seen a lot of, where the mistake is made and you're paying a lot in taxes that you don't have to. So that's why I'm focusing in on that. I can help you with C corporation. I can even help you with limited partnerships, general partnerships, and nonprofit organizations, estates, trusts. Yes, I can do all that. I can do all the entities out there, gift tax returns. I can do all that. But the major problem I see in all my years of doing taxes, going on 17, 18 years now, is that you haven't been counseled, or you just automatically assumed that you start your business, you'll be a sole proprietor or single member LLC and go about your day. And you get your tax return done and you're hit with this high tax bill, but you haven't been counseled as to what you could strategically do to avoid that. So that's the purpose of my channel, is to help you do that, is to walk you through and hold your hand if necessary, how to set up an S corporation to save money on taxes, thousands of dollars, thousands of dollars. So you hang in there with me. You're going to have to call me at some point, email me to get started, because it's going to be confusing, may sound complicated. I go through this with my clients all the time, and that's normal. You're not the tax accountant. I am. So I'm going to help you. I'm going to hold your hand. Yes, I do have to charge a fee, but good news, everything you do with me where I charge a fee is tax deductible. It's a tax write-off. It's a business expense. So hang in there with me. We'll get through all this together. And please thumbs up, subscribe to this channel, and we'll have a good journey together. I appreciate you. Thanks for watching. Bye-bye for now.